Today, the Federal Reserve is going to release minutes from its last policy meeting. Will they offer more clarity on Chairman Jay Powell's pledge to be patient when it comes to further rate hikes? Is the market too optimistic right now? Let's bring in Todd Horowitz, chief strategist at BubbaTrading.com, and Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Guys, good morning.
Good morning, Cheryl.
Todd, first to you.
Good morning, Cheryl.
I'm looking at Fed funds futures right now. Priced in, it's 0.9% or something. It's a fraction that there's going to be any rate hikes the rest of the year. I'm not so sure, Todd, that that's really a safe bet. Are we being too optimistic right now about Fed funds futures and interest rates for the year?
Good morning, Cheryl. Yeah, I think we're being way too optimistic. I think the markets have already priced in exactly what you're saying, which I think is well overdone. I don't think the Fed can really sit far that back. If the economy is really as good as we say it is, and we think it is, then it should be creating a bigger demand for money, which should increase the interest rates, which is actually healthy based on the economy. So I think we're well overdone. And of course, the magic act of the Fed is now, it's a sad thing that all we worry about is what the Fed minutes are going to say or what Jerome Powell is going to say versus the actual function of the market.
Yeah, well, the market, Doug, is really banking on that we're not going to get any more interest rates. Loretta Meester, though, remember, she's the president of the Federal Reserve Bank of Cleveland. She actually said, look, if the economy stays strong based on our projections, she used the word "are," then she thinks an interest rate hike is maybe going to happen later this year, and that would be the correct move for the Fed. That would really derail market sentiment.
Well, it might set it back a little bit, I think. You know, I don't think the Fed's going to do too much until the 10-year gets way above 3% and maybe even around 3.25 or 3.4. Then they have a little bit of room to move. But until then, I can't see them really moving. I think inflation is definitely picking up a little bit. It's possibly looking at 2.5%. And so maybe that's they need to have a little bit of a lever there to do something. Right. And it wouldn't surprise me if interest rates go up, that they do have a little bit of room to move one or maybe two times, but you have to see rates go up. They're just not going to do it.
Doug, stay with me for a second here because I want to talk earnings. We heard from Walmart yesterday before the bell. They had very strong sales for the holiday quarter. They're really making moves when it comes to their grocery and delivery, Flipkart. I mean, that was a strong number, but they said that the economy for 2018 was good for them. Earnings now, we're pretty much 80% behind us now, 16% and change year over year for S&P 500 companies. Are you feeling pretty good about what we've seen?
Well, you know, I think there's been a barrage of lowered earnings expectations, which really sets us up well for firms to continue to outperform their earnings estimates now because we've lowered them. But, you know, yes, Walmart is definitely making some inroads against Amazon. They had some good numbers, and, you know, they're looking like they've got their house in order there to take advantage of this. But the economy is good. This is what we have to realize, is that we used the word recession a million times in December when the market was down. I haven't really heard it that much lately, but that's because things are actually pretty good. It
seems like we're pretty far away from a recession, you know, Todd. And also, I was surprised to see home builder confidence come in at the record levels that it was. It was at a 4-month high for February. I would have thought that was going to go the other direction because of the interest rate jump. And also, you have to wonder now with consumer confidence kind of stabilizing if the economy is in pretty good shape still.
Well, sure, I think the economy is in good shape, but I think the home builders, when interest rates started to fall, I remember the 10-years come from 3.2 all the way back to 2.6. So that should create some confidence because obviously it makes money easier to get for the home builders. But I think that the overall consumer confidence, if we go back to where it was, and we go back, you know, years ago when we had these high levels, that usually signifies we're coming closer to the end than just the beginning. And I would think that although nobody wants to talk about a recession, I think there's a recession coming sooner than we think, and I think it will tie into the Fed's inability to do the right thing for the markets and keep it under control.
The Fed's going to cause a recession?
I don't think the Fed's going to cause a recession. I think what's going to happen is that because they've kept these rates so low and everything's been done, they're going to be forced to raise at some point. Okay. You know, I think the banks are finding some leverage problems here, you know, because they're buying a lot of loans through all these third-party lenders. So I think that becomes a bigger problem. Yeah. And when you have to have people come out, like Steve Mnuchin came out about a month ago and said, hey, the banks are in good shape, no problem. That's the same thing that Paulson said in 2008, that the banks, everything was fine, there's nothing to worry about. It's the same thing Andrew Mellon said in 1929. Now, again, I'm not predicting a crash. I'm just saying that there are some causes to think here and take a pause. I mean, these markets are kind of melting up like there's never going to be another down day again.
Oh, Todd. All right. Todd, Doug. Guys, thank you very much. Appreciate it.
Absolutely.
Well, we are less than 1,000 points from that record close.